2025 is about to end, and the Canadian dollar is weaker than it's been in decades. In fact, it's slumped nearly 30% in value since 2007. And while this may have been a slow decline, many experts are saying that it's a warning sign, and the worst is yet to come. Tariffs, a weakening labor market, and the rise of AI are all reshaping the landscape. And to be honest, things aren't looking good. But what does that all mean for the Canadian dollar and its future? And what does that mean for people living here? So in this video, we'll uncover why the Canadian dollar keeps falling, how the US dollar has managed to stay dominant through all these years, and what does that all mean for Canadians and our economic future. So let's talk about it. But before we begin, we need to understand why the value of a currency changes. I mean, what dictates the price? You see, at the very basic level, the value of a currency works like any other market. It's based on supply and demand. If more people, businesses, or countries want a currency, its value rises. And on the other side, if the demand of the currency falls, its value also falls. And so now you must be thinking, what really drives this demand? Well, there's three main factors: interest rates, trade, and global confidence. Higher interest rates attract new investors, making the currency stronger. Stronger exports like oil, lumber, and manufactured goods create more demand for a currency, thus also dictating the value. And perhaps the most important, global trust and stability determine whether the world actually wants to hold a currency or not. And when all of these factors are strong, the value of a currency rises. And when they're soft, the value kind of starts declining. And that's exactly what happened in 2007. You see, back in 2007, the value of the Canadian dollar was riding sky high. Oil prices were booming, global demand for resources was so strong that for the first time in decades, the Canadian dollar was valued the same as the US dollar. Things were great. Shopping trips across the border were cheaper, vacations in the US cost less, and it seemed like Canada's economy was finally standing shoulder to shoulder with its southern neighbor. But you see, as it is with all good things in life, this didn't last long either. As a housing crisis hit in 2008, everything went to shit. Oil prices collapsed overnight, leading to a fall in the Canadian dollar. And this is when Canadian dollar's heavy reliance on natural commodities was exposed, which was unlike the US dollar, by the way, where its value was supported by global finance, military, and also technical dominance. Canadian dollar was heavily dependent on resources it exports and their prices fluctuating up or down. And these prices falling in 2008 wasn't just a one-off thing. And Canada never really fixed deeper issues that made its dollar vulnerable. You see, for one, Canada is still heavily dependent on oil and natural resources. So what ends up happening is, as these prices go up, the dollar's value also increases. But when they drop, which they've done multiple times since 2008, the Canadian dollar also takes the fall. And to make matters worse, Canada has piled on tons of debt, which includes government debt, housing debt, and even huge corporate debt where large Canadian companies are operating on borrowed dollars. So what ends up happening is that when global investors look at Canada, it doesn't come across as a stable and a safe investment, which in turn hurts the Canadian dollar's value even more. And on top of these factors, Canada has consistently struggled with weak productivity, which simply means that Canadian companies haven't really invested in innovation and productivity the way the US companies have, which means we have fewer industries that the world demands and less reason for global investors to invest in our economy and hold Canadian dollars. And all of this explains why the Canadian dollar has consistently fallen over the last 2 decades. But you see, that's not it. Things might become even worse, because now it's just not the market volatility that's dictating the value of the Canadian dollar. It's also politics. Donald Trump has set off new trade tensions between the two countries. The US has already slapped tariffs on our steel, lumber, and even agriculture, sectors which are backbone of our economy. And it's a scary situation as trade with the US makes up nearly 75% of Canadian exports. Like, they're our biggest customer, and they don't want to buy from us. And with these new tariffs in place, demand for Canadian goods will drop, as every time American companies or consumers pay more for Canadian products, the incentive to hold the Canadian dollar will decrease as well, which will in turn push the value of the Canadian dollar even down. And this, combined with the fact that Canada is actually going through an immigration crisis and there's a major economic shift happening in the world due to AI, it's definitely going to put a lot more pressure on the Canadian dollar. we could see more decline coming the next 12 months, which means that in our everyday lives, everything from grocery to gas and everything we need to live our lives will become more expensive. But you see, there's still things in your control that you can do to help you protect from what's coming next, like investing globally or simply keeping some assets in the US dollar so it can reduce your exposure to the Canadian dollar. Also, upskilling and adapting to the changing job market. AI and automation are reshaping the way we do work, and staying on top will ensure that your skills are relevant and you can continue to be employed in the coming months. Finally, also ensuring that you're planning your finances and budgeting the right way and not taking up on unnecessary debt while building a strong emergency fund. And we need to realize that while things may look difficult, they're not going to stay so bad forever. Like economies and currencies always bounce back from the dips. But one really has to be prepared to ride out the dip to come out of the other end thriving. And 2025 may have been a challenging year and we may have more challenging time in front of us. Hopefully, understanding the forces at play behind this decline and staying informed and taking proactive steps will definitely help us thrive as a country. Alright, this is it. I hope this was useful and I'll catch you in the next one.